Section 17, subsection 3 discusses the profits in lieu of salary. Profits in lieu of salary includes compensation due or received from employer on termination, compensation due or received from employer on modification of terms of employment, any payment due or received from employer or former employer except exempted part of gratuity, HRA, commuted pension, retrenchment compensation, RPF, that is recognized provident fund, etc. Payment from approved superannuation fund, GPF, PPF, insurance policy, etc. are not included in the definition of profits in lieu of salary, and any amount received prior to employment or after cessation of employment also are not included in the definition of profits in lieu of salary. Let us see the meaning of allowances. Besides basic salary, an employer may give benefits to the employee in two ways, either in cash or in kind. If it is given in cash, this is known as allowances. If it is given in kind, these are known as perquisites. Now let us see the different allowances and the taxability of the allowances. There are three categories of allowances. One is fully taxable allowance, that is, these allowances are fully taxable. There are fully exempted allowances, that is, these allowances are not chargeable to tax. And thirdly, partially exempted allowances, that is, part of this allowance is taxable and part is exempted. Allowances which are fully taxable includes city compensatory allowance, entertainment allowance. In most of the cases it is taxable. For government employees up to rupees 5,000 it is deductible. There are other allowances which may be known as tiffin allowance, fixed medical allowance, servants allowance. So in this way there may be different kinds of allowances which are fully taxable under the Income Tax Act. Allowances which are partly taxable, number one happens to be the house rent allowance. It is very interesting that if an employee is in receipt of house rent allowance and resides in a rented house, in that case he or she may be allowed exemption under section 10 subsection 13A. So there are three conditions being provided. Number one, actual HRA received. Number two, excess of rent paid over 10% of salary. And number three, 40% of salary. But if the house is situated in any of the four metros, now we can say the presidential cities like Kolkata, Mumbai, Chennai and Delhi, in that case it is 50% of the salary. Again I am repeating, number one, the actual HRA received. Number two, excess of rent paid over 10% of salary. And number three, 40% of salary or 50% of salary, as the case may be. Among these three, the least will be exempted under section 10 subsection 13A. Here the meaning of salary for this HRA purposes, when I was talking about 40% of salary, 50% of salary or 10% of salary, what does the salary mean? Interestingly, the meaning of salary is different for different purposes. For this HRA purpose, it includes basic salary plus dearness pay or dearness allowance if the terms of employment so provides, and thirdly, commission if commission is paid as a fixed percentage of turnover. In that case, salary means the aggregate of these three. Let us discuss a problem on house rent allowance. Mr. A resident of Kanpur, receives rupees 2,02,000 per annum as basic salary during the previous year 2017-18. In addition, he gets rupees 20,200 per annum as dearness allowance, forming part of basic salary for computation of all retirement benefits. 7% commission on sales made by him, and rupees 36,000 per annum as house rent allowance are also given to Mr. A. Sales made by Mr. A during the relevant previous year is rupees 90,000. He pays rupees 31,500 per annum as house rent. We have to determine the quantum of house rent allowance which is exempt from tax. Let's see the solution. First, we have to calculate the salary for the purpose of computing house rent allowance which is exempt from tax, and it works out to be rupees 2,28,500. That is, we calculate the basic salary rupees 2,02,000 plus dearness allowance rupees 20,200. Dearness allowance will be included because it is a part of salary, and commission at the rate of 7% on rupees 90,000, which comes out at rupees 6,300. Commission is taken into calculation of salary because commission is given as a fixed percentage on turnover. Now, out of the house rent allowance received by Mr. A, rupees 36,000, the three conditions are given, and the least of these three will be exempted from tax. Number one, the actual house rent allowance received, rupees 36,000. Secondly, excess of rent paid over 10% salary. Rent paid is 31,500, 10% of salary is 22,850, and that's why the amount stands as rupees 8650. And third condition is, as it is in Kanpur, so 40% of salary, which comes at rupees 91,400. So out of this three amount, rupees 36,000, rupees 8650 and rupees 91,400, the least is rupees 8650, and as such 8650 is exempted under section 1013A of the Act, and the balance amount of rupees 27,350 is chargeable as house rent allowance.